U.S. Christmas retail season kicking off now. Jeff Green, president of his own retail and real estate consulting firm in Phoenix, described how consumer spending trends at this point reflect a barbell graph, which tells us that jewelry products in the middle range price points will have the hardest time this Christmas.
Jewelry buying is becoming almost like a barbell effect, meaning it's either very value-based on one end of the barbell, or it's high-end luxury based on the other end of the barbell, where we're finding those two ends of the barbell are what are doing well. It's the area in between that's not. I would say that basically among the value-oriented, more middle-of-the-road consumer, that is, one of more middle income, we're going to see jewelry at the $50 to $150 price point, just because they don't have that kind of money to spend this Christmas, given the continued downturn in the economy, the high unemployment rate, etc. The other end of the barbell, the luxury segment, is going to come on extremely strong this Christmas, and part of that, I think, is due to the fact that the higher income folks are the folks who are usually in the stock market. The stock market's doing well, therefore the luxury consumer is more confident to spend.
With strong sales growth expected online, Jeff shared what jewelers should consider for their online campaigns in terms of price points.
Well, that's the big issue is again, let's talk about the barbell a little bit. Let's talk about luxury, the high end first. I can't imagine that people are going to be heavy consumers of product $5,000 and above that, one, they haven't been able to see, and two, the people who can afford that are the older folks who are not as used to buying online. I think it's going to be the opposite end of the barbell, the more value-oriented folks who may do more shopping, more jewelry shopping online. I think you'll find kind of the lower end of the jewelry segment being shopped pretty heavily next Monday.
Jeff Green Partners expects that overall U.S. Christmas season sales will be flat to up 2% since the economy and unemployment remain great concerns to shoppers, and because there are, after all, only 4 weekends left to buy gifts, given that Christmas Day falls on a Saturday this year. Looking ahead, consensus advisors addressed long-term trends during their State of the Economy webinar this week. Consensus analysts concluded that jewelry sales in the U.S. this year should top out around $60 billion, which is north from last year and about where it was in 2008. The group agreed that the industry should expect low single-digit sales growth this Christmas, despite some really horrific employment and underemployment rates in the U.S. Consumers, though, have gotten used to the state of affairs at this stage, and the retail industry itself has not suffered any body blows this year. So when all is said and done, the environment remains stable going into first quarter 2011. Consensus has observed that public retailers, including the big jewelry chains they follow in general, have been hoarding cash during the recession. Given the absence of any large-scale political or economic trauma to the markets then in coming quarters, Consensus predicts that retailers will look at 2011 as an opportunity to grow their business, albeit conservatively. Public retailers they monitor currently hold about $70 billion in cash on hand, and Consensus believes that with a positive Christmas under their belt, retailers will start to loosen up next quarter and use that cash to expand inventories, look into adjacent markets, add services, and/or increase acquisition activity as the year unfolds. Here is a look at how precious metals prices performed this week. To all our viewers stateside, we wish you a happy Thanksgiving. Be sure to check diamonds.net for all the latest industry news.